there are different ways to add value in the sector. There are different risks and rewards to every aspect of the sector. And when I say the sector, you can subdivide it several ways. One would be by commodity, gold, silver, iron, as an example. Another would be by stage.
Rick Rule emphasizes the diverse opportunities within the resource sector, highlighting the importance of understanding the investment matrix. He discusses the various ways to add value, from commodities to different stages of projects. Rick points out that markets perceive price risk and reward differently at different times, emphasizing the need for investors to align their preferences with market conditions. He shares insights into the potential for significant rewards in early-stage exploration, citing past successes and the unique financial benefits that exploration success can offer. This discussion unveils a big market opportunity, especially for those who can navigate the complexities and identify undervalued sectors in the resource industry. Let's dive into the video to hear his full thesis.
Early exploration, advanced exploration, development, construction, production, merger and acquisition. And then, of course, there's division, as an example, geopolitical or political risk division. Is a deposit in Congo, as an example, rich enough that you can overcome the supposed political risk of being in the Congo, or should you be in a jurisdiction that you believe at least is less risky? So what you suggest is very true. There would seem to be an investment matrix around most subjects, and understanding the matrix is important. Having pontificated, now let me get into an answer, I think, in the way that you intended it. I think it's important to note, too, that when you look at the matrix, different markets price risk and price reward differently. So there are points of time, as an example, in the early part of the 1990s, when the industry made some profound discoveries. And what happened was that exploration came into favor, and people were paying up for exploration stories, not because necessarily that the future was going to lie in exploration, but rather because success had been demonstrated in the immediate past with regards to the exploration thesis. So I think it's important for the intelligent investor and speculator to understand which part of the investment matrix is most attractive to them in terms of their outlook, in terms of their risk tolerance, in terms of their time preference, but also which part of the market is undervalued in the market relative to others and which is overvalued in the market. I hope that that's a useful introduction for your listeners. In terms of stage, I have enjoyed a lot of success myself in real exploration, which is to say the earliest stage, riskiest sector. In this circumstance, the expectation, the probability is failure. You do it because you can fairly easily screen out the companies that have the highest probability of failure. You do that by screening for explorationists who have a track record of success. The success accrues to a fairly small number of people, and the rewards can be stupendous. I think back as an example to Arequipa resources, 30 cents to $30 in 19 months. The financial reward that accrues to exploration success is unlike financial reward that accrues anywhere else in mining. It's much more like research and development technology.
In this next discussion, Rick Rule delves into the various stages of resource investment, highlighting the high-risk, high-reward nature of early-stage exploration. He emphasizes the unsuitability of this phase for many investors due to financial and psychological reasons. Rick introduces the discovery phase, where surface work is done to confirm mineralization, representing a lower risk, lower reward stage compared to grassroots exploration. Moving forward, he discusses the pre-development or development stage, occurring post-preliminary economic assessment but pre-production, where the focus shifts to defining economics and attracting financing for production. This breakdown provides valuable insights into navigating different resource investment stages.
That being said, the high-risk nature of it means that it's unsuitable for many people, both financially and psychologically. The amount of time it takes, too, makes it financially unsuitable for many people. But I think it's important that people understand that the early stage exploration companies, if one learns how to do it, generate the highest risk and the highest reward in the sector. Much more tolerant to most people are what I call the discovery plays, where you have done a job targeting. In other words, you have done whatever surface work you need to do to determine that there is mineralization there. But now you need the third dimension. You got to quantify tonnage and grade. So you put a hole in it. After a discovery hole's been put in place, that's called discovery stage exploration. That becomes much, much, much lower risk. Risky to be sure, but lower risk. Similarly, lower reward. In Arequipa, in the prior example, the grassroots exploration phase, the prospect generation phase, the 30-cent phase, the stock went really from 30 cents to $4 on discovery. It went from $4 to $30, certainly an attractive response, but in terms of percentage gains, not as attractive in the sort of discovery phase. So I think you go from grassroots exploration to discovery phase. Once you've gone through discovery phase, once you have delineated the deposit, once you've published a document, well, a resource study, first of all, and a preliminary economic assessment, you're in something called the pre-development or development stage. You have a sense that you have a deposit, you're trying to define the economics, and you are trying to drill off and delineate the project to the degree of certainty that's necessary to attract the financing to put that deposit in production. And I define this stage as post-preliminary economic assessment, but pre-production.
Today, we delved into the intricate world of resource investment with Rick Rule, uncovering the diverse ways to add value in this sector. From commodity divisions to different stages like early exploration, development, and production, understanding the investment matrix is crucial. Rick shared insights on the high-risk, high-reward nature of early-stage exploration and the subsequent stages, emphasizing the importance of risk tolerance and market valuation. If you found this exploration valuable, don't forget to subscribe, like, and share your thoughts in the comments below.